Hello Deep Valley community, thank you for watching. I wanted to get this video out because it was a comment that came in and it's Friday night and my family's hungry, so I just wanted to get this out quickly. So this was a video question about price to sales, why I use that as a metric. So let's just get stuck in real quick. So the way to get strong returns, I have found in my experience, is less about trying to go for those investments where you can, let's say, make a 10x. I found that it's easy to just follow what Buffett does, and it's just trying to go for established businesses have a long history of going through various cycles, um, and have been willing to embrace recessions and really tested businesses. So you want to try and make the game as easy as possible. So I try to look for businesses that you're not trying to kind of predict the growth rate over the next, let's say, 3, 4 years. It's a new business, something sexy, something cool. I'm trying to go for businesses that are really dumb and have basically just really copy Buffett's approach to going for durable businesses. So this video is specifically addressing price to sales. So here we go. So this I kind of just quickly chosen a video and a stock that I had a position in. I don't have a position in anymore, but this is something that I was invested in before. So I wrote this back in 2018. So I've just kind of gone through and I've kind of just so here just my analysis is very kind of looking at, okay, so in the past, this is a company now is called Bosch, used to be called Valiant. I did have an investment, but I don't anymore. So in the past, I was looking, okay, so this is a business where the price of sales of this company, so it's a pharmaceutical, it's a high margin business. People were willing to pay approximately 4 times the price of sales of the business. And if I compared it with the peer groups, the medium. I like to use a medium kind of just kind of some people prefer to use an average, and I feel that the average kind of gets skewed too easily. So I just want to look as quick and dirty to find out. So the median of the group so comes up as 3.6, and people, so it shows me that the peer group was being willing to be paid 3.6 in the past, but now investors are really despondent with pharmaceuticals as a whole, and they're only willing to pay 2.2. So you can see that in the past, people were willing to pay a premium for Valiant, or now called Bosch Health, um, because there was the illusion that this business was amazing. Whereas now, people are only willing to pay 1 times its sale at the time when I wrote this article. So you can see just my thinking there. Okay, so peer groups that were willing to pay kind of an average price, but for Bosch Health, people were really infatuated with this investment. And now the peer group, people are willing to pay a small multiple, but for Bosch Health, people are truly despondent. So that's it. You're just kind of trying to see relatively what's the people's sentiment. And I believe that the sentiment is very nicely reflected on the price of sale. It kind of does away with a lot of the narrative, a lot of the noise. We can kind of go slightly more convoluted, but I just really wanted to kind of just show just bird's eye view without getting like really caught up in this. So just in the case of this investment, it kind of worked out reasonably well. So this article was around, I put here, it was approximately August time. And if you look, it kind of, you made like a 50% return here in approximately a year. So this is, I'd sold approximately in the ballpark of 23 to 25. I can't remember what the average worked out as. But it just shows like, if you just buy something when it's truly out of favor, just on a price to sales ratio, it does work. So here's another example. So this is Facebook. I don't have a position in it, but you can see here that on the price of sales that at the moment people are only willing to pay 7.2 times for Facebook, whereas in the past they were willing to pay approximately 13 times. And if you come, this is Morningstar website, so if you come and you can see that in the past people were willing to pay a higher multiple for Facebook, whereas now they're not willing to do so. So what I'm trying to drive at is that the way to make strong returns is not by going to try and be like really intelligent, not being the smartest guy in the room. So the way to do it is just to try and do slightly better than the S&P. So we know that the S&P does on average kind of 10%, right? So 10% compounded over 10 years is in the ballpark of 2.5 times you make a return. That's fantastic. That's a really good return. But the way to do slightly better is just to think about this word, enough. Just trying to kind of do enough better than the S&P. So not trying to be like the world's greatest investor, because if you try and do that, you're going to end up being a speculator, and it ends up being a zero-sum game. Speculators do well, do well, do well until they don't. So the way to really do this is just to try and aim. I like to aim for approximately 15%. Now, if you aim for 15%, that means that you kind of made approximately 4 times your money in a 10-year period. Now, that doesn't sound great. You put like 10K and it like becomes like 40K after 10 years. That's a long period of time. So the secret to do this is to do it consistently, and you've seen in Buffett's case, that do it really over huge periods of time. Now, this is the secret, right? The secret is you do this every month. You put a small amount in, whether the market's up or whether the market's down. You put a little bit of your savings towards this, and it really compounds over time. Now, the way to do this, it can be just to buy an S&P, but a slightly better way to do it is to go where the crowd doesn't want to go. So I've showed you the example with something that worked out for me, which was Bosch Health, and I'm showing you a live example with Facebook. Now, if you want to do slightly better than that, you'd go where the crowd isn't. Every company, like my wife knows Facebook, like your family and friends on Facebook. So these household names are very well followed. Now, doesn't mean that there isn't opportunity in these strongly followed businesses, but if you go in slightly less famous businesses, there's even more of a variance. Sometimes they're really overvalued, like some of these times small caps are really overvalued. But at the moment, I'm recording this in 2020, at the moment small caps have been utterly demolished. So if you look at the small caps, and if you're selective, so being selective is really about saying no to a lot of the businesses. So a lot of opportunity comes, and I'm going to do a next video next time, maybe start out tomorrow, about how to do a screener, how to optimize a screener. So I hope that'll be something that would excite you, and if you do, please do subscribe. This is our Value Investing Journey, and I'll see you next time. Bye.